Hi, well, welcome to this week's video, and this one's going to be very brief. Interesting thing about this coming week is that there's going to be a bit of interesting economic news. We've got the inflation data coming out on Wednesday from the US, and it's Monday or Tuesday, we've got the GDP numbers coming out of the UK. So those are going to be the two big ones. And of course, those are going to affect the market, but primarily the stock market. I'm going to go through these. What's interesting also about this week is that I'm in a number of different positions. I'm not normally in so many, so it's quite a lot, but I'm going to go through them one by one, and we'll start with the Nasdaq, and then we'll go into the currencies. So Nasdaq, as you know, I've been long on the Nasdaq for some time from down at these levels down here. And I took profit just before this trend line, and we've moved up through that trend line to this current resistance. I thought it was prudent to take profit at the trend line because it's a long-term, long-standing trend line. We are in a bear market, and there's a lot of uncertainty and doubt about where the market's going next. I expect, however, that we could get a move up. One of three things is going to happen. We're going to find resistance here. We didn't manage to get up through there through Friday. We had a big rally in the morning, and then after the pre-market trading, in the beginning, at the opening of the stock market, a big rally, and then nothing happened for the entire day thereafter. So the best part of 6 or 7 hours, the market just moved in a very tight range up near this resistance level, which is a good thing in terms of the bullish potential for this market, because we didn't fall back dramatically from this horizontal line, and we held up quite well against it. So we'll have to wait and see. I really don't know. My strategy for the Nasdaq, if we reach the next resistance level, which is this line here, I might consider scalping some small shorts, and then particularly if we get up to this next level at around 12,900, I'll be looking to add some shorts in there for a move back down to these lines, which will then act as support. Alternatively, we're not going to get through this current resistance. We'll fall back down to this trend line. I expect that might happen anyway on Monday, and that we might retest this trend line from the top downwards, try and bounce off there, and perhaps move up through this resistance level. All eyes will be on the inflation data on Wednesday, so it's possible that Monday and Tuesday we'll get a rally into that data on Wednesday. If the inflation rates are very high or remain high or haven't dropped significantly, that means that there is danger of a 75 point, okay, let me just restart that, 75 basis points rise in the in interest rates later in this month. I think it's around the 20th. If the inflation data is more optimistic or better, we may then actually only get a 0.5% rise. But most people think, and the market is already pricing in, that we'll probably get a 0.75% rise in interest rates. So all eyes on these three levels here, really. The current level that we're at, the next resistance, and the next one. I think cautiously, certainly at this top one at 12,900, I'll be looking to sell, perhaps scalping shorts off this one here if we get there. And if we drop down off this current resistance level where we are at right now and drop back down to this trend line, perhaps making a slightly lower low than Friday's trading, that'll be a potential area to scalp some longs for a move back up to one of these lines. So it's going to be fairly nimble trading next week on the Nasdaq, and those are the key levels. There are three of them. Well, there are actually four. There's this major one, looking for shorts there, perhaps scalping shorts here. Here, nothing, no action. I'm not going to do anything until we either break through or we fall back down to the top side of this downward trend line, in which case I'll be looking to scalp some longs, and bearing in mind that we might actually form a lower low than Friday's trading on Monday and test that trend line from the top side, and then bounce up back to this line, or even that line as the week progresses. So that's the Nasdaq. So I'm square on that, no positions at the moment. Gold. Well, I'm long on gold. I've taken out some of my positions. I'm not particularly optimistic with this trade, but if we do fall back down, I will have covered my loss on hitting the stop loss, which I'm going to put at, which I have actually moved to 78.15, I think it is. Sorry, 17.15. Why did I say 78? I'm looking at the 8 there. So 1,715. And then I'm more interested actually in the levels down here at around 1680. 1680 to 1700. This area here, if I draw in, I've got a line already in the bottom there from the Fibonacci that I've drawn in. Actually, I'm going to get rid of this fib because we don't really need it anymore, because we've broken through that 78.6% Fibonacci level. So if I just draw a horizontal line in slightly lower down and put it at this support here, that's the interesting place to be buying. Bearing in mind, we could get down to 1725. And if you have a look at why I say that, there's a very good support level here, which has been support and a consolidation zone and a resistance all along this chart. And it's the top of the spike low, so over here. So if I put a line in there at 1725, that would be an interesting place, possibly for a trade, a decent trade, or maybe just a scalp. But these are the two levels. Most importantly, this one down here at about 1680, but 1725 might be worth a go at. And I'll be updating as the week goes along. But you can see that we're not really moving up from this current level. We got down to about 1735. I've taken profit. I think it was 1747 I took profit, and we've fallen back down from there. We pretty much closed at the same prices that we opened on Friday. So a test of 1725 might be worth a go. But more importantly, if we do get a move down to 1680, that'll be a fantastic place to buy gold. Big simple reason is because if we break that support, and you can see it's been a significant support on 3 occasions, if we break that support, then we're in for a resumption of this move down. And really, there's not much support beneath there until we get down to into the 1500s, so a long way down. So that support is going to be crucial. If you're a bull on gold, don't hold your position below this support line. That's looking for trouble, and we could see quite a big move down. I think, however, in general, that these two levels will hold. So 1725, if failing that, then 1680. So if you're not long now, you could get long with a very small position. Stops below around 1715, which will be below the support level, or you could wait until we get to 1725 and look to buy gold there with the stop loss at 1715. So it's a very tight stop loss, and potentially a move back up to this red line, which was previous support, which will now become resistance. So we've got 3 decent levels here, very much like we have on the Nasdaq. So that will be an interesting day to trade, or week, should I say, coming up. So 1725, 1680, those are the key levels on gold. If you're going to get long, those are the prices that you should be. If you're long already, then well, I would just put your stops up at 1715 and hope for the best. Perhaps if you've got a small position only, you can reload, add some more to it. In other words, average into a long position at 1725. So you'd be long now at, let's say, 1740, adding to 1725, stop loss 1715. I think that's a decent trade for gold. If you break through 1715, then 1680 will be an excellent place to buy. Now, the euro yen, it's the next one. It's one that I just added to, didn't want to put that line there. I've got some positions on here, which I did update my members, and I tweeted about it as well. In fact, I'm short on this currency. This is just a demo. It's not a demo. It's actually a live account, but it's not my main trade, my main trading vehicle. And I've done this for illustration purposes, but I got short at 137.50. That's this green line at the bottom here. Didn't really want to have this one in. Let's get rid of that. to remove confusion. So that's the price that I got in at, this green line. Also 2,000 units. I'm willing to add another 2,000 units if we get up to 139. That's where this block is. You can see there's a limiter order in there to sell, and my stop loss is up here at 145, 140.30. So I've got stop loss for my current position that I'm in, and yeah, and I've got a stop loss for this new order that will trigger if we hit that level at 139. It's very difficult to see at the moment because the light's a bit gloomy, even with the bright screen. And stop losses for both of them there. So this is just an illustration trade. I think in general that this currency is probably going to head down to this level. You can see my take profits in there at 133. So we've got an excellent risk reward ratio. So we've got a relatively small stop loss in comparison to the size of the take profit. And that's where my target will be. The target for that trade is there quite obviously because it was previous support and resistance. Twice it was resistance and once support. And it's also where the 200-day moving average is. So that's an excellent support area. With a bit of luck, we might, and I say we might move a little bit higher, trigger this short sell order, another equal amount, and then move back down again. So I know it's looking a bit bullish at the moment, and well, we've got a bit of a reversal candle on the daily chart, which indicates we may have had a false break beneath the support, which is where my trade was triggered. But let's see what happens. So that's Euro Yen. I don't really know. I've got a relatively small position on this because I've got quite a big stop loss. Stop loss is between 137.50 and 139, so it's 150 pip stop loss. So my position size on that is actually unleveraged, so it's a 1-to-1 position size, which means I'm trading literally, an unleveraged position. So it's a 1.5% risk for something like a 3%, 3 or 4% gain, depending on maybe a 5% gain, depending on whether we trigger this this other order and then move down. If we don't trigger the other order, the gain will be less. If we do trigger that and move down, it'll be double the amount of profit. So that's a Euro Yen, and that's just a little side trade. I don't often trade this currency, but I saw an opportunity there, and I think overall, technically, it looks pretty good. And I'm hoping that actually, best case scenario, we trigger this, we move a little higher on Monday, trigger this short order to sell at 139 and then move down from there. So let's see what happens. It's a bit of a volatile currency to trade. If you do trade Euro, Japanese Yen, you've got to allow for bigger stop losses, bigger ranges, more volatility, because we're trading currencies where there could be intervention. In fact, it's interesting that there might be intervention in the Eurozone because of the weakness of the euro right now. And having said that, let's talk about the euro. I'm in this trade from 1.01 long. That's where this is on my chart, where the cursor is there, 1.01. So roughly 100 pips up. Actually, it's about 87 pips up right now. I think I'll go in just under 1.01. So that's about 87 pips in profit. It's very, very oversold. If you look at the longer term daily chart, it's incredibly oversold. We've been dropping really since this time last year, almost non-stop, without any respite, any pullback of any significance. We've dropped down to near parity, which is a big psychological level. And we'll talk about the dollar index. In fact, I'm going to put that up onto the screen right now. Dollar index is problematic, so it looks like we might have a reversal coming up on the dollar index. Let me just quickly put that on there. So while we're talking about other currencies, this is the dollar index on Friday. We formed a beautiful spike high against 107.50. A big reversal pattern on the dollar index. I don't know whether this is going to hold. We've seen a few in recent times over there. We saw something approaching a dark cloud cover here. We saw another bearish reversal pattern, but they didn't last long. We only had a small pullback to well, this one was quite a good pullback actually, but the last one wasn't. We just pulled back to that previous resistance, which became support. But overall, the dollar index as well has just been on one-way traffic upwards ever since, about same as the euro this time last year. And we're right up into that dizzying height around the Fibonacci level, around long-term highs. Well, there's been a flight to the dollar out of stocks, out of metals, into a solid asset with high interest rates. So that's what's been propping the dollar up and keeping the other currencies low. Other currencies have got very low interest rates in their central banks compared to, or other countries rather, not currencies, compared to the dollar, which has got, well, we'll probably be at 2.25% sometime this month when the next, around about the 20th, when the next rates announcement is. So that's that. So let's switch this back to the euro. So I'm long on this. What I'm going to be doing is holding on to this position. I've got my stop losses below this level at 1.0040. And I'm hoping for a move back up to at least this red line, which is at 1.0350, thereabouts. Previous support will now become resistance. If we do get a move up there, we're going to struggle to get through there. And we'll see a lot of, if we are at a turning point and we're going to move higher in the euro, it's not going to happen overnight. There's going to be some range trading, I think, between this low here at 1.005 and 1.035. So that 300-point range is going to be critical. In fact, I'm going to move this green line down so you can see the range a bit better. So there we go. So that's the range that we'll probably be stuck in for much of next week and possibly a number of weeks to come. So strategy is to buy on dips, sell on rallies. So if we do get up there, consider selling the euro. If we get back down to the bottom, if you're not in a long trade like I am, then consider buying the euro, stops below this red line at parity. The danger is, of course, one other big danger is that we get a big spike through parity. If you remember a few weeks ago, we saw the same thing hitting long-term lows on the euro and the pound. We got a massive move down through those levels. I'll show you on the pound, actually. It was over here. You can see it on the euro. So this was actually around this time last month. So the euro had a big spike through. This was previous long-term support at 1.05, and we spiked down, held around there, and moved back up rather suddenly, and had an attempt at a relief rally, but it wasn't very long-lasting, of course. And we see the same thing on the pound. Now, the same thing could happen on the euro. We could hit that level at parity, €1 to the dollar, have a move down like we did there, and then a move back up again. That's very, very possible, and dare I even say it's likely that we'll test that parity level. But with a bit of luck, we'll hold where we are now and move up at least to 1.0350 before having another attempt lower. So that's the euro. And the pound, same sort of thing. I'm long from 1.19, which I have been saying for quite a long time. I've been waiting for that level. We finally got there on Wednesday last week. We held above there miraculously. We didn't. We got stopped really by this level here on the first attempt at rallying up through there. Didn't manage to make it. We dropped back a little bit, and then eventually we pushed up. We're now above that support level, which is now resistance level. Perhaps I should draw a line in there as well. So that level there was pretty important because had we failed to, you see, we tried on this occasion to break up through there. We didn't manage to do it. We fell back down further. And, well, it looked like, for love of money, the pound was heading much lower. But on Thursday and Friday, we managed to hold above that previous support, now resistance. And then on Friday, it looked like we were trying to move back down again, but we had a late relief rally on the pound. Well, late, it was sort of afternoon relief rally, and moved back up to these current highs and closed with quite a nice bullish reversal candle. So same, that's about 100 pips up from 1.19, 130 pips up or so. And what we'll do is wait to see what happens. I've got my stop losses beneath this low. I'm hoping for a move on the pound up to, let's just copy these lines. Let's put some resistance lines in place so that you can see where we're going to struggle to get through. Let's clone that line. So there we go. There's the first resistance there from the previous low. And then let me see if I can do another quick clone. And then we've got another one up here. Let's put it kind of over there, maybe there. So that's at 1.2344. And if we get through there, then we're back up to this top here. And this line can now be adjusted. So somewhere up there, 1.26. So that's quite a long way up. It's actually not very far if you look at the bigger picture. It looks super close. But it's quite a long way from where we are now. So that's about 600 pips away. With this massive move down, it doesn't look very far, but it is quite a long way. So we're going to struggle. We've got moving averages at both of these green lines. We've got the 20-period moving average here at 1.2150, and we've got the 50-period moving average at 2350, and they coincide with these horizontal lines. Of course, those moving averages will move lower as time progresses, so they won't be exactly at those lines. But if we were to be rallying up there on Monday to one of these levels, those moving averages will come into play, and in combination with these horizontal resistance lines, those moving averages are going to cause some struggle. So we've got some pretty heavy traffic above us. We have to be careful. Now, strategy, hold positions, wait for a reaction here, wait for a reaction there. I think probably cover, and I've got to think about it as the week progresses, and the price action will tell me what's going on the smaller time frame charts like the hour chart, 4-hour chart, but I'll be watching the reaction over here, perhaps covering my long position. That'll be for about 250 pips. If we manage to bust up through there suddenly, which would be great, but unlikely. But if we did, then I'd be looking to definitely close my long positions at 2350 and then actually sell into that resistance level for a retest of these lows down here. Now, what I want to do is actually clone one more time and put this line at the lows. So very much like the euro, I think we're going to be trading in these ranges for some time. So the range, the broader range is between 1.19 and 1.2350, and the shorter range, the smaller range or the tighter range is between 1.19 and 2150. So that's what we're going to be doing. We're going to be trading these ranges long until we hit resistance, closing the longs here possibly. I don't think I'll be looking for shorts at this point, but certainly looking for shorts here. If we don't close these longs and reach up to this level, I'll be then looking to close my longs and sell. So so next week's going to be interesting. It's going to be a week of some movement and some nimble trading required. You're going to have to be in and out of trades. We're going to be long, we're going to be short on both of these currencies, even though I think we may have reached a bottom. I don't know. It's very possible that both the euro and the pound will continue to move lower, and that the euro will get somewhere below parity and drag the pound down along with it. So we'll have to just be very careful and look to be nimble. So that's my strategy. Exit longs here or there. That'll just be closing and waiting. This one I'll be closing and selling for a reversal back into this range. If none of that happens and we continue to drop lower, then we'll have to reassess and see what happens next. Okay, Dolly Yen, this is the one that everyone's interested in. Well, you know my position. I'm short at actually the current price. This is a 4-hour chart I've got here. I'm short at 136 and at 136.50. I added some positions, short positions in there on Friday. So I'm short here and I'm short here. So I don't know what's going to happen with the Dolly Yen. A lot depends on what happens with any intervention any threats from the Bank of Japan, any ideology which comes out in terms of perhaps supporting, and rest in peace to Abe. By the way, that was a tragic event. Very sad to hear, the ex-Prime Minister of Japan, and I hope that his family is getting through that okay. What a terrible thing to happen. But that aside, I'm hoping that we're going to break down through this support line. This is a 4-hour chart. I could put the same thing on a daily chart. You'll see the same sort of thing, really. I was just having a little closer. You can see on the daily chart it actually looks, a lot better. So we've been stuck here for about a month now, which is quite unusual for this currency. The thing is, if we don't go up, there's only one way to go, and that's down. If we don't go down, there's only one way to go up, and that's up. So we're stuck in a range at the moment. And whilst we're about it, let's do some more cloning and put this line at the top here to depict the top of this range. My strategy on this currency is slightly different to the others. I'm willing to continue to sell on rallies. So I've got orders stacked up above here, looking to sell all the way up to 140 and potentially even higher. But I'm hoping that we'll move back down through this breakthrough here in maybe next week. Again, it's going to be a big week because we've got the inflation rates coming out on Wednesday from the US, and that's going to inform some thinking on interest rates, and it's going to inform the stock market. It's going to have an effect on the economy. And and I think, I'm not sure if it's either next week or the week after, sometime this month. I'll have to check in more detail. I haven't done my full analysis on the news releases, but at some stage in this month, we're going to find out about GDP and whether technically we've entered a recession in the US. So so all of these things are going to be playing. So it's going to be a bit of a fundamental week in terms of those matters. I'm hoping, I should never say hope when it comes to the market, but personally, for my own benefit, I'm hoping for a move down to the support line and potentially even the support line. So that's at 132, call it 132, 131.50, and then down to this one here at 126.50, 127. And against both of these moving averages, the 50 and the 100 are more or less still at those levels. So that'll be, they'll add support as well. I think we might have a bit of a price magnet down here at 126, 127, where the 100-day moving average is and where that support line is. And if that did happen in the coming days and maybe weeks, that would be fantastic. You can see, just out of interest, that the price doesn't stray too far away in general from the 100-period moving average on this pair. And I can go back a long, long time. We're going back to 2020. So the gray line, this gray line here is the 100-period moving average. This one here, gray, dark gray, black. And you can see, right, when we do get very far away from that 100 MA, we have a big snapback like we did there. But in general, the price is always drawn back to this 100 MA. You can see there it's wonderful support, 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 support there, and then it becomes resistance all along here. This is going back to 2019. And it's an attractive line for the dollar yen. There we moved quite a long way away, not much further than we are right now, actually. So that was about 110, and this is 10. Let's have a look at the distance between this high and the 100-period moving average. So that's about 110, 111, and the 100 MA was at 106. So that's, let's say, 500 pips away between there and the moving average before we had to have a pullback back towards it. And every time, so there, how many pips away? That's 115 down to 100. So that's about 400 pips away. So 400, 500, 600 pips is about as far away as we get from this moving average most of the time. And forever, we've been miles and miles above it. Now, it doesn't mean we're going to go back there. These are just interesting facts. They're not trade predictors or anything like that, just potential opportunities. But we've been up here at 137, and when we were there, the moving average was at 125. That's 1,200 pips away. 1,200 pips away from the 100-day moving average. At the moment, we're at 136, and the moving average is at 126. So it's still 1,000 pips away. That's very, very unusual. And as you've seen, I've gone back several years. In fact, I could go back probably 20 years and show you the same thing, that we are too far away from this moving average. We're very overextended. We've got a consolidation pattern. We're not able to get higher. We're also not able to get lower. We've got this 20-day moving average supporting us, along with this trend line, which is held perfectly and beautifully, precisely even, which is not always the case with trend lines. If I go back to the 4-hour chart, you can see how it has been just about perfect, which is very unusual. And the more precise things get in terms of these sort of things, I always look for precision, which indicates an unusual circumstance, because the market is not precise. It's messy and choppy and unpredictable. And when you get things that are too perfect, you know that they're going to change at some stage fairly soon. So that's what I'm looking at the Dolly Yen now. Though interestingly, I'm not in the Nasdaq, but I was until Thursday. But I'll be definitely trading the Nasdaq next week, as I've explained earlier in the strategy which I've outlined in here. Gold, I've got out of my gold trade on Friday, but I'll definitely be in this one next week as well if we move lower. If we don't move lower, I'll leave it alone and wait for another opportunity. Euro Yen, well, you can see my position there. That's a demonstration. That is a live account, but it's not my main setup. Euro, I'm in long, about 80-something pips on that, 87 pips profit. You've heard my strategy. I'm in the pound. You've heard my strategy. I'm about 130 pips up on that one. You've heard my strategy on that. And Dolly Yen, I'm in that. So I'm in 1, 2, 3, 4 of these currencies right now. I'm not in gold or the Nasdaq, but I expect possibly next week I will be in those. And the other thing that I'm in as well, I'm not in oil, I'm not in gas. I've left those alone for a while. If you want to, if you're interested, let's just have a quick look. I know there are some traders of these instruments. Brent crude oil, let's go back to the day chart. I'll be looking to sell oil if we get back up into these highs, and that's it. I'm not looking to buy it. I'm only willing to trade from the high extremes. So if we do manage to, and I don't think we're going to, but if we do manage to get back up to this sort of level here, 130, 137, I'll be looking to sell oil. So natural gas, well, this has come off from 9.5 to 5.5. Again, I was considering selling gas there, but we hadn't quite got high enough because there is a previous high going back quite a long time, which I was waiting for. We didn't quite get there, so I'd have to look at the weekly chart. So natural gas I'm not interested in at the moment. I like to trade from extremes, and there you can see. So that was the high we reached, but there was potential for it to move higher. It didn't get up to some of those levels. I was looking at the sort of 11 to 12 region. We didn't get up there, and it's fallen back dramatically since then, all the way back down from around 10 to around 5.5 or 6. So potentially, if you're interested in trading this natural gas, where that red line is, I've drawn it in. Actually, I might have a look at this just while I'm looking at it again. I did study this quite intensively on towards the end of the week. This red line here, previous resistance, it's also the 78.6% Fibonacci level and previous resistance there. So this could be an interesting area. That's at 4.9. If you're going to be buying into natural gas, wait for it to get to 5. I think 5 is 5. 4.95, probably worth a little go there. So yeah, so oil, we're kind of diddling in the middle, nothing there. Natural gas, yeah, if you get down to 5. Let's have a look on the day chart quickly. I'll just cover this very quickly, and then we'll talk about crypto. So there we go. There's that same red line on the day chart. We've broken down through all of these moving averages, so that's a little bit bearish. But 4.9, pretty good. So you can see it was support there. We saw on the weekly chart it was resistance and support. was resistance here, support there, support there. It's also the 78.6% fib, my favorite fib for reversals. So if we do reach that fib and this horizontal line and previous resistance and support and all that sort of thing, and we'll be pretty overstretched by then, might be a good place to buy natural gas. So having said that, we've talked about everything else, including gold, Nasdaq, all the currencies that I'm looking at. And then finally, let's have a look at Bitcoin. I'm also in this one. My average position is, that's at 1.2. Sorry, not one. I keep on saying, I get mixed up because I'm dealing with points and decimals and big numbers and small numbers. So that's my average position there, that red line at the bottom, at 20,300. We're at 21,500. You can see it's live as I'm talking because this beast doesn't stop over the weekends, and looking pretty good. So that red line there, the top red line, was resistance. It's now become support. We're holding above that for the moment. Doesn't mean to say we're not going to try and test this moving average. There's a 20-day moving average. We might get back down there again, retest the support at 20,000. Quite possible. But for now, so far, so good. For me, this is not a trading position. This is a buy and hold position. And every time it drops lower, I try and buy a bit more. I haven't bought anything since this area here. At around 19,000 and I think it was 19,030 or 19,330, something like that. So that was the last time I bought. But if we do get back down to this spike low here, if you have a look at the weekly chart, you can. It doesn't look. It's not really a spike low on the daily chart, but on the weekly chart it is. Sort of, not really. Bit of a spike. So if we do get down to these lows at around 17,500, I'll be adding some more. And even better, if we get down to this red line here at 12,500, I'll be buying even more. So this is a buy and hold scenario. I'm not day trading it. I don't have time to day trade it. I just think it's a pretty good investment. Having said that, it's a risky investment, and I'm willing to lose half of my money that I put into here. I don't think it's going to happen, but I'm aware that it could happen. So that's Bitcoin. Back to the day chart, and what else can we look at? I think that's all. So we've covered the euro. So you just, as you go through this video, you can just make your notes from what I've talked about. We talked about the pound. We talked about the Dolly Yen. We haven't covered the Australian dollar. I was actually long on the Aussie dollar, but I covered that long position at this resistance. Remember, I got in at right at these lows here and covered this. I don't really know what's going to happen in this. I'd rather focus on some of the major currencies that I've been looking at. We've talked about this euro-yen trade. I've told you my exact strategy on this, so that's pretty clear. The rand, for those trading the South African rand, well, the rand's just fallen through the floor. In other words, it's gone up. This chart has gone up against the dollar, and we're right up at 17. And just a few days ago, we were down in the 15s. So good trade for those of you who are long. I was long I was long on this one. I covered my trades at around 20, and it's moved higher. So I got into this trade at around 19.5. So this is long the pound South African rand. I don't really know what to do with this one right now. I think any dips back down to this new trend line, if I put it on the 4-hour chart, it'd be easier to see. Any dips back down to that trend line there, this one, and any of these moving averages, and support down here. So that'll be support. Let's put a line in there so you can see it. Around here, so that's 19.6 roughly. So there's support. In other words, stop losses should be beneath here, possibly this 200-day moving average This is a 4-hour chart. Let's have a look at the daily chart. If you're looking at long-term trades and moving averages, so there we go. Forget about that one. These moving averages here, they're forming a nice little pinch shape, which I always love. In other words, all those moving averages are touching each other precisely at the same price, and that's at about 19.6, actually 19.767. Let's call it 19.7. I said stop losses should be below 19.6, so that's perfect. Any pullbacks to this trend line, great chance to buy pound, South African rand. I think this is a pretty safe trade. So what I want to do is make one more line here and pullbacks to this area. Actually, I think 20. So 20, big round number. It's a 2. Market loves 2s and 8s. 20, big breakout area, big round number. Great place to buy. It'll also be at this trend line. So strategy for pound, South African rand, buy at these levels here. 20, maybe slightly lower. Stop loss below 19.6, where this little pinching movement of the moving averages and that previous horizontal line exists. So that's pretty simple. Very easy trade there. And I took some good profits off that one. Right, just recapping dollar index we talked about. Nice spike high there. Perhaps we've seen a top in this index for the meantime. Nasdaq we've talked about. So we've talked about these 3 levels, crucial levels. I've given you my strategy on that. S&P I'm staying away from right now, but it'll move pretty much in harmony with the Nasdaq. Resistance levels up there. We don't want to be trading too much at the same time. I'm already in 5 different things, but we've got resistance there. That's obviously a good one. We've got the 50-day moving average. We've got this previous resistance horizontal line and the downward trend line. So if you're going to be looking to try shorts on S&P, well, around 139.80. Failing that, then we'll move up to, I'm doing a lot of cloning of lines today. Then we'll be looking at that area up there above us, and possibly even here. Let's do one more. So that line there, and then one slightly higher. So when you're trading, just trade off levels. And wait for overstretched conditions. And if your trades don't work out and we get a reversal just for a short period of time, at the least you can scalp some money out of the market by doing that. And also you can move your stops to break even and hope for a longer term move. That's basically the strategy for trading off these levels. And when you do get to these levels, so there, and there, and the same applies to all the other charts, just switch down to, I'll use this as an example. So that one there, 39.50, so that we reached before. If I switch that to a 15-minute chart, I don't know if it's going to be possible to go back all that way on a 15-minute chart. Let's see if we can. You can switch, there we go. So there's a 15-minute chart. That's the last time we reached that level. And you wait for a rush up to the level. It's a price magnet. All of these levels are price magnets, which means as the price draws slightly closer to them, they tend to get drawn up there rapidly before reversal. And you can see that on the 15-minute chart at that 39.50 level. Same thing there. We rushed up. Didn't quite hit it there. Actually, this is slightly out of place. There we go. So rushed up there, some very strong candles, and then fell back down. Same thing here, a little spike through, rush up to the price magnet. And when I say magnet, exactly what I just said. A magnet, the closer you get to a magnet, the stronger the attraction becomes. Same with markets. You get near these levels, the price often rushes up to them, scares everyone out. Everyone who's looking to short, they think, wow, the market's really rushing up to those levels. It looks like it's going to burst through, but actually it's just being attracted by that magnet level because that's where people want to start selling. And if you go to the hourly chart, and I'll finish with this, actually, no, I won't, because I'm going to look at economic news very quickly. If you look at the hourly chart, you can see it perfectly there. So rush up, not a clear reversal, probably wouldn't have taken that one, but this one, a rush up to touch the same line, and then a big bearish engulfing candle, perfect opportunity to sell if you're trading these shorter term timeframes. But it depends on your strategy. If you're looking to sell, then take those levels by all means. If you're not looking to sell and you're looking to hold for a break, then, and you're right about it, the chances are that the price will rush up through there. All right, so that's that. Now, let's quickly have a look through the economic indicators. Yeah, so here I am. This is what you get from my FX book. As I said in my last video, sign up at my FX book. It's free. You can get all sorts of cool things on there, including heat maps. You can get their charts. You can get this news sent to you by email once a week with everything on it. But what I want to do is focus on, and don't worry, I don't get anything from advertising this for you. I just use it myself. I think it's very cool. But if we move through this, there's just a couple of things that I want to highlight. So here we go on, there we go, Wednesday, 8 o'clock my time, so 8 a.m., it's the middle of the night, Eastern time, 2 a.m., GDP in the UK. Super interesting. Last time it was minus 0.3. Are we going to get another negative, which means a recession in the UK, which would be interesting for the pound and UK stock markets. And then Wednesday, 14:30 my time, which is 8:30 Eastern time, New York time, inflation rate, super important. And if we have a look at, we want to actually have a look at the core inflation rate. All right, so yeah, so there are no projections on here. Consensus 5.8%. So that would be almost unchanged. And then let's look at the overall inflation rate, which was 8.3. Consensus is actually 8. You can't see it, it's just off screen over here, but consensus is 8.8. So it's the expectations and possibly what the market has already built into the pricing or pre-priced is an actual increase in the inflation rate, which will be bearish for US stocks, bullish for the dollar, bullish for bonds, and so on. So that's super important. That's on Wednesday. Excuse me, I've got a bit of a hoarse throat today. And then on Thursday, it's just the normal jobs report, jobless claims. So that's on Thursday, 8:30 Eastern time. Jobless claims, that comes out every week. So actually, the NFP on Friday was pretty good. So that's probably going to be okay. So it was interesting, actually, NFP on Friday, because the dollar actually fell back, even with a very good non-farm payrolls report in the US, so 350-odd thousand. And I think that's it, really. What else? We got retail sales on Friday. That'll also be interesting because, it's going to be interesting to see how inflation and interest rates both affect retail sales. So I guess they've this report is highlighted as high importance. So I guess it will be pretty interesting. So that's Wednesday, Thursday, Friday. Some interesting economic news. We've got we've got England GDP. We've got inflation in the US on Thursday, and was that Wednesday or Thursday? I can't remember. Let me just double check. We've also got the producer price index on Thursday, so that's going to be interesting. And let me just double check to make sure. Yeah, so it's Wednesday, inflation in the US, Wednesday, not Thursday. And then the UK GDP is also on Wednesday. So big day on Wednesday, UK GDP and inflation in the US. Thursday, we've got the jobs, normal jobs report in the US. And then we've got retail sales. on Friday, 8:30 a.m. Eastern Time, retail sales. So there we go. Wednesday, very important. Thursday, well, just jobs, but I think that'll be okay. And then Friday, we've got retail sales. So that's it for the week, really. And you've got my strategies, and you know what I'm doing and what I want to do. Let's just switch this back to the Dolly Yen quickly. And I want the daily chart on there. So if you've got any questions, please email me, get hold of me. You can do it on this channel, or you can get hold of me on Twitter. Join up with my Twitter. Follow me on Twitter if you want intraday alerts on occasion. And if you're interested in joining up with my members service, you can go and have a look on my website. There are links there. You get a 30-day free trial. It's not going to cost you any cent, a single cent, for 30 days. And if you decide that it's for you, then you can carry on. If not, then just stop. It won't cost you anything. And then please, if you wouldn't mind, I'm asking you really, really nicely, please subscribe to this YouTube channel, and also hit the like and notification bells. It will really help me a lot. Thanks so much. Have a good week ahead of you, and I look forward to keeping in touch on Twitter and email for my clients.